we've actually decided to call this a new segment, and the name of the segment is Double R Talks, or Risk to Reward Talks. So it actually dawned on me recently that since October, I've already been trading for a little bit over 8 years, and there's a lot of things that I've experienced in the markets that could have definitely, if I would have had a mentor, shorten my learning curve. So that's what I'm here for you guys to do today, and to talk about you guys is different things that you guys can start doing now to shorten your guys' learning curve. Because I feel like if I would have just implemented these things and started doing these things a lot earlier on, I would have found profitability way earlier, which in turn would have made me way more money. But at the same time, you know, everything happens for a reason. We all go through our journeys, and I'm just here to kind of help guide you guys and motivate you guys, and not just that, educate you guys as well on how you guys can shorten your learning curve. So let's start from the very beginning, which is going to be the very foundation of my trading strategy. So when I first started trading, you know, I did get into trading price action, but I also was looking up different ways to trade online, and so many people were telling me so different things. One of the main things early on was like, yes, I had started learning a trading system based off of price action, but at the same time, I had a ton of different indicators on my charts as well. I was looking at the RSI, I was looking at the MACD, I was looking at Bollinger Bands, and it's just like when you first start off in the trading world, like you don't know what to do, just simply because, again, like you're inexperienced. So one thing that I was also doing as well in the very beginning of my trading career was, what I would do is I would grab a ton of different chart patterns that I would see consistently repeat, but what I didn't do was backtest those patterns. So the patterns I'm talking about specifically are like double tops, double bottoms, head and shoulders, inverted head and shoulders. And although I would take those patterns into consideration, nowadays I wouldn't ever solely just trade that pattern, because the one thing that you guys have to ask yourselves when trading a specific system, or even building your own trading system, is a simple question: why do the markets move? Which, if you go back and you study the markets, you know, these big banks, hedge funds, institutions, they're not trading head and shoulders, they're not trading double tops, they're not trading double bottoms. While you can use them for like confirmations on your trades as double rejections and different bounces off of a key level of support or resistance, I wouldn't ever solely rely a trade off of that, just simply because these patterns aren't the patterns that are going to be moving the markets. You don't see the guys on Wall Street, the big banks, hedge funds, and institutions look at a specific double top pattern and be like, yeah, you know, there's a great double top, I want to put millions of dollars behind this double top pattern setup. It doesn't happen that way, right? When we talk about trading and price action specifically, we have to trade areas that have and hold liquidity. So what I would do moving into the future, specifically back then, if I was just starting off again, would be to focus on a trading system that's based around price action and understanding liquidity, and how we could actually find great trading opportunities based off of where there's liquidity being generated in the markets. Which kind of leads me into another topic that's kind of getting into order flow, getting into accumulation, distribution, based off of like a market profile or TPO chart, looking at days that are balanced in the markets, looking at imbalanced days in the markets. Again, you guys can look at this on market profile and TPO charts, understanding those days. So if we see that there's very balanced days in the markets and there isn't an imbalance in the market where there's just a ton of aggressive buying or a ton of aggressive selling, I know, hey, you know what, the last 2 or 3 days of the markets, price action has been in the market's been very balanced. So we can probably expect to continue to see that until we see a break of certain price range. Let's say you're trading in equity, let's say you're trading Tesla. If you're looking at maybe a range on Tesla where the market has been super balanced in between like 610 and 620, it's okay, well, if we see a break of 625, or we've seen like fake outs come all the way up to 625 and then pull back down, then we can anticipate an imbalanced market coming, and we can see a lot of aggressive buying. Or vice versa, if it's a short, if you see a break of 590, let's call it like 590, let's call it 590 flat to be in general, a $10 break under the specific 600 key level of support, and you see that break, it's like, okay, well, we've broken through the breakout, we see a lot of aggressive buying coming into the markets, we don't have any other type of like big sellers just sitting until like 675, then it's like, okay, well, we can anticipate price action moving to the 675. So again, if I were to go back and I were to restart everything, what I would do is focus on a system that is built based off of understanding price action, understanding liquidity, understanding balanced days in the markets, imbalanced days in the markets, and those are the days that you'll be looking for fake outs or continuations. If the markets have been balanced the last 2 or 3 days, I would just be looking for fake outs inside of the markets and reversals, looking to trade that range. If the markets have been super imbalanced those last 2 or 3 days and we've seen a lot of aggressive buying or a lot of aggressive selling, I'd be looking for trend continuation over those next 2 or 3 days. And one thing I would also be getting into specifically to decrease my risk on some of these trades while increasing my reward would simply, by getting better entries, would simply be by getting into the footprint charts, understanding where we have aggressive sellers coming into the markets, where we have aggressive buyers coming into the markets, what type of orders are hitting the bid, what type of orders are hitting the ask, how big are these orders, understanding volume overall as well. These are all different things that I would have done in the very beginning that would have definitely 100% shortened my learning curve, and I want you guys to get into this now, so then that way, for those of you guys that have only been trading for maybe a couple of months, or maybe you guys just started, you guys can start doing this now, and by the end of, let's say, these next 12 months, by the end of 2025, you guys would have accelerated what somebody could have potentially accomplished in 2 years in just a simple year. Which, if you guys are locked in on trading and you guys are really focused, you guys can make a lot of growth, and you guys could really get a lot of potential out of the markets and out of yourselves just by locking in for that 1 year alone, especially if you're putting in the work every single day. But we're pulling up to Publix right now. I'm gonna grab a snack, and I'll see you guys for the next segment.
I've been out late night creeping, trying to slide on bitches. Posted up with the militia, niggas ain't switching. Mine on missions, mine on pussy and millions, mine on pussy and millions. I'm trying to call a sex symbol to eat my kids up. They say more money, more problems. Bring on the problems, bring on the problems, bring on the motherfucking problems. They say more money, more problems. Bring on the problems, bring on the problems, bring on the motherfucking problems. Ayy, braid it up in my Suizo, hit them then I get amnesia. Life ain't getting any easier. Flacosita, I know that I'm not in love. She don't love me either. It's just hard to find a love. Did she keep on getting deeper? Who said it's cheaper?
Bro, shit is fire, bro. Shit is fire. This shit got me through kindergarten. And they're still in business, so it tells you something.
You single-handedly kept them in business.
Oh, 100%. 100%. I'm gonna start going. Whenever people ask me why I'm buying Lunchables, it's choosing me for my daughter. No, the best part too comes with an airhead.
Oh shit. Let me hold that.
Trying to give me some head?
You came with an air. What?
Bro, it's romantic. It's beautiful out here.
I do got a lot of debt.
We're in a beautiful, romantic scene right now. And talking about romance, Valentine's Day is coming up in a few days. For those of you guys that want to get funded up to $200,000 and actually get the chance to get on an A-booked account and trade real funds, use code LOVE for 20% off of any challenge. So, another one of the big important ones in my last 8 years of trading, what I've learned, and especially what I've neglected early on, it's the boring work that a lot of people are avoiding, that they don't want to do, that's going to get you to where you want to be. And what I'm referring to isn't the fun stuff, which isn't executing trades every single day, although that is crucial because you need to get in your reps, so then that way you actually can gain the experience of reading price action, applying your trading strategy to the markets live every single day, and actually sitting and watching each and every candlestick tick by tick, minute by minute, literally hour by hour. Because like backtesting is one thing, you could click through hours of price action in, again, the matter of minutes, but the important thing here is journaling. And I know a lot of people aren't journaling, which if you are serious about your trading, you need to be journaling. Like it's a non-negotiable. Somebody who tells me that they don't journal their trades, I'm very skeptical as to how they can become a better trader, because there's no way for you to improve if you can't self-reflect on the different mistakes that you're making in the markets every single day. And just to give you guys like a guideline, a rough plan on how you should be journaling, again, what I do now and what you guys should be doing and what you guys should be implementing is you need to have a specific trading time. So what I mean by this, and we can also talk about consistency, right? And if you're looking for consistent results, but you don't have a consistent approach to the markets, you're never gonna make money. Start again from ground zero and start by building a consistent routine around the markets. So if the market opens up at 9:30, it's us, we trade US futures, indices, gold, the equities market as well. If the market opens up at 9:30, for me, I like to do my pre-market analysis at around 8:45, 9 a.m. every single day, where I'm gonna be mapping out all of my watch lists and planning the trades that I'm gonna take on each and every single one of my watch lists. And what I'll do is, let's say I have like 10 different instruments on my watch list, I'll pick the best 3 setups that could potentially lead to high risk to reward ratios with relatively small risk behind those trades, and I'll trade those setups. And I'll wait mainly for those setups, because I'm not going to take 10 trades a day, which leads to another point. You should have a max set number of trades that you're going to take on any single day. It doesn't matter if it's Monday, Tuesday, or Wednesday, if the markets are slow, if the markets are super volatile. You need to have a set number of trades that you're going to take every single day. For me, that's only 3 trades a day. Now, I also follow this guideline where you guys could follow it and implement it as well. If my first trade of the day is green, then typically I'm done. Especially if it was like a good, like 2.5 hour plus trade, if that trade is the first trade of the day and it's green, I'm done. If I take my first trade of the day and it ends up being a red trade, then I will give myself another opportunity to make that back. If the second trade ends in green, then I'm done for the day. Doesn't matter how big green is. If I made all the money back that I lost plus more, or maybe just break even for the day, then I'm done. But if my second trade of the day ends in break even, then I still will give myself one more opportunity to make that money back that I had lost originally in the morning, and look for that bigger R multiple trade to potentially make that loss back, plus way more. So that's kind of like my trade guideline as to what I follow, which it may not work for everybody, so just grab it, use it as your foundation and tweak it. But going back to the trading plan and the trading journal, again, you need to have a consistent routine. So that's when I do my pre-market analysis around 8:45 to 9 a.m. every single day. I'll actively trade between 9:30 all the way to roughly around 11:30 every single day as well. That's my active trading window, meaning that's when I'm looking to place trades. Some trades may be like a really long overnight trade, which is fine as long as I place it in my trading session. That's really what matters at the key levels that I'm looking to trade. But mainly I'm day trading. I'm looking to get in and out within the same day. I'm looking for intraday price action and intraday volatility to be able to give me the R multiple that I'm looking for. And also to shift your mindset from making $10,000, $20,000 in a single day, let's call it, for those of you guys that are a funder, maybe have a little bit larger capital to trade for yourselves. It's to shift the mindset from, hey, you know what, I'm looking to make money trading, to, hey, you know what, I'm looking to buy myself more trades. And what I mean by this is you grab the R multiple ideology. So I'm gonna risk $100 to gain $200. And the way I like to view it as is, you know what, I just hit a 4 or 5 hour multiple trade. I just bought myself the next 4 or 5 trades. So how can I make these next 4 or 5 trades last to the point where if I do lose all those trades in a row, it only costs me X amount and I'm back to break even from the point of this last winning trade. And I like to do that specifically with really big trades that are like 3.5, 4, 5 R multiple trades. So I view every single winning trade as me buying myself more time in the markets and buying myself more time in the game to consistently improve. And that's something that you want to be doing in the beginning too, because a lot of people will get into the markets wanting to make money, but they consistently are blowing their accounts or losing evaluations, and they don't even have enough time in the game to improve from their mistakes. So that's one thing that I would have also changed in the beginning, is buying yourself more time in the game. So after your pre-market analysis, during your active trading times, what I like to do is set time milestones to just talk about the trading day and import data. Like, I basically call it my report card. And what I'm doing is every single 25 to 30 minutes as the market is moving and as I'm going through the trading day and taking trades potentially, you guys know how it works. Some days there's trades, some days there isn't. But the days that there is trades, and even the days that there isn't trades, I'm giving myself a report card every single 25 to 30 minutes, just basically reporting on how my trading day is going so far. So if it's going well, what trades I've taken, if I've missed any trades, how I'm feeling emotionally, what I feel about my trading account, literally importing as much data as possible. Things I feel like I'm doing well on, things I feel like I'm doing poor on, things I'm gonna have to review for the rest of the week, different things that are on my mind about the trading day, if I'm feeling anxious or not. And then lastly, I need an end of day review and a post-market analysis. So for me, that's just gonna vary. It really just depends on the day, how busy I am for that day specifically. So if I'm done trading by, like, let's call it 11:30, 11:45, then typically my end of day review, if I don't really have like a busy day, will be like around 12, 12:30, so I can just kind of wrap up my trading day and move on with the rest of my day. But then sometimes I get kind of like sidetracked and move on to different things, and I'll do my end of review by maybe like 8 p.m., 9 p.m., which is perfectly fine as well. Different things to look over in the post-market review. Again, how did I do on that trading day? What types of trades did I take? Was it a red day? Was it a green day? Did I pick up any bad habits? Did I stop actually committing one of the bad habits that I told myself I was going to drop from the previous trading session? It's literally a review on how you can improve and going through your trading day. All of our data is going to look very different, so everybody's journal should look different. But that is one of the main things that I would do moving into this year for those of you guys who haven't done this yet. And these are the most important things that I've talked about in this video that I feel like would have definitely excelled my trading career and definitely have shortened my learning curve. I hope you guys grab all of the information and value that I provided to you guys in this video, because again, it's gotten me years to get to this point, and there wasn't somebody that I had that was a mentor that could be like, hey, Raul, this is what you should be doing from the very beginning. That's what I'm here to do to you guys. And again, like, I'm not just giving you guys anything. This is really information that if you really apply it to your everyday trading, you're going to see progression. Again, I mean, you guys have seen my accomplishments, my 6-figure payout alone from a 6-figure payout in 30 days too. That was over a 50% gain in just one of the prop firms that I used to trade in back in the day. And you guys have seen my multiple 6-figure days inside of the markets where I'm showing you real money being traded. I'm also showing you real withdrawals as well. You guys can go back in my YouTube channel and watch all those videos. They're still there. They're all documented. So I hope you guys don't take any of the information that I gave you guys in this video for granted. I hope you guys learn it. I hope you guys apply it more importantly. And I'll talk to you guys in the next one.